Hey everyone, welcome back to Kitco News. I'm Jeremy Szafron. Well, the S&P 500 is pulling back after hitting fresh all-time highs at the open, and traders are pausing ahead of tomorrow's Fed decision with yields drifting lower and tariff negotiations still unresolved. Now, the 10-year is holding at about 4.34%, and President Trump has yet to confirm an extension on the China trade truce as we tape this. Of course, we'll keep an eye on this ongoing story. And meanwhile, for the silver and gold's flat at around 33.20, silver holding just above 38, and Bitcoin is trading under 117,000. So where are we headed from here? And are the metals setting up for a bigger move? Florian Grummes joins me now, of course, with the technical read that matters. Good to see you, my friend.
Thanks for having me again, Jeremy. Always a pleasure to be with Kitco.
Always a pleasure. You're getting some sun, too. It's a nice summer for you. Thanks for making the time. It's been interesting watching the summer trading on gold. I mean, let's start with that. I think, what are we, 33.20, about that right now? Up slightly today, but still quite range-bound. Now, back in April and on this show, when we had you on, you kind of said that gold would not go below 3,000. It was very resilient, and it was kind of at a top. Now, you marked 33.65 as your bias level. We're below that, and your chart shows a completed head and shoulders pattern. Is gold setting up for more downside, or is this just a pause? Where are we at?
Well, look, I told you back then that we've probably seen a short-term blow-off top, so to speak. And I also said that gold isn't very likely to go below 3,000, but rather trade sideways, consolidate that big move that we've seen since the beginning of the year, right? So this new all-time high at 3,500 is still in place. We've seen a low at 3,120. Gold recovered quickly and failed to break through 3,450 now, I think 4 times. And over the last few days, it came back hard, nearly $135 within the last 4 trading sessions. So here we are, summer doldrums. It's trading sideways. It's consolidating. It's digesting. It's nothing spectacular. It just takes time. People need to be patient. I'm not worried that gold is dropping big time here, but could this continue for a few more days, weeks, maybe even 1 to 3 months? Yes. Usually the summertime is a time to go to the beach and take it easy. There are still some traders chasing every move, but generally volume is lower. Yeah. And that's what we're seeing basically in all markets, and of course also in the gold market. We had the COMEX option expiry yesterday for the August contract. That's usually also something where they like to take the market down so that most of the options expire worthless. That happened yesterday. But I think already here at 3,300, let's say 3,285 on the daily chart, gold has very good support. I don't see it dropping much. I also think you need to be a little bit more patient here. But over the rest of the year, I think we can see 4,000 plus X.
Okay. Yeah, we're hearing it too. Some analysts, obviously, this morning coming out saying that. So, just to be clear, I mean, did you mention your threshold is about 33.65 on spot? So, above that, you flip bullish, but until then, it's kind of a sideways to down bias.
Exactly. Yeah. I think in the very short term, it's sideways to down. The daily chart is already showing a little bit of an oversoldness here, so I don't think we have a lot of downside in the immediate future. I mean, of course, end of August, we have the Jackson Hole meeting that also usually can create some pressure in the metals. But overall, look, I mean, maybe it pulls back again to 3,250 to 3,200, but this is all not big moves from where we are. Yeah. So it's building a base here, and it tested this 3,450 now 4 times. It's just a question of time when it will break out. Obviously, nobody knows this. But as soon as I see that a bottom is in of this pullback that we are experiencing right now, I will call it. And I think, third or fourth quarter, we're going to see $4,000.
Yeah, nicely said. Okay, well, let's take that same lens and apply it to silver, because the setup looks even tighter. I mean, in April, you said maybe silver would hit about $50. Silver hasn't broke 40 all year. But what's the catalyst now that didn't show up over the last 3 months?
Yeah, silver is interesting. So it's up 23% since we spoke in April. So it came a little bit later than I had anticipated. And the move so far has been less, how you would say, like less momentum driven. Mm-hmm. You've seen a few impulsive updates and then week-long like sideways consolidation. Usually when silver shows up, it goes really berserk and it really rallies hard for a few weeks. That has not happened, which tells me that this whole bull market, and especially the rally that we are in the metals, is still continuing over probably at least another 1, 2, 3 years, because silver is not showing that typical behavior at the end of a bull run. So it's creeping higher. Then you have these impulsive updates, then multi-week consolidations. I think we're going to see $50 in the second half of this year at some point, but it's playing out slower than anticipated. And I think the reason really is that the physical market is dominating the prices. So you don't have this massive speculative run. It's rather that step by step, slowly but surely, the physical demand basically is forcing prices higher. So it's all bullish. It's all looking good. People have to be a little bit patient. It's a difficult market for traders, but if you've been stacking physical silver over the last few years or even decades, yeah, you're doing well.
Oh, I get the comments, Florian. I get the comments. People are always saying, I wonder if this is, if this silver is actually going to take off. Because your silver chart, I was looking at it this morning and it's got one big number on it, 37.50. That's your bias line. Right now we're at 38-ish, just barely above it. But volume, like you said, it's quite thin and volatility is kind of drying up. Are we looking at a failed breakout potentially?
No, I don't think so.
Yeah.
It would be ideally this 37.50 can hold over the next few days and weeks if silver would want to continue this kind of like consolidation. But even if it would pull back a little bit further, I'm not worried at all. Look, the gold-silver ratio is still so high. It tells us in the long run, silver still has to make the big move is still coming in silver. And we all expect the $50 level. Now, my thinking last year, and I wrote this in a few papers, I said at some point in spring next year, silver will show up. Now it has shown up a little bit later, but I also thought it would be really like a strong impulsive move, and we haven't seen that. Instead, it's slowly but surely creeping higher, and that tells us that most likely it will break through that $50 level. Technically speaking, we know it's the mother of all cup and handle patterns, so we have price targets of at least $100. You can even make the case for $500 silver an ounce, and I think it's coming. And probably the slower this move up to $50 is now unfolding, the better in the longer run. Yeah. So I'm not worried at all. I think silver is very bullish. And the truth is, compared to gold, silver is still very cheap. So if you want to buy and invest physically in the metals, you need to buy silver.
And Florian, you got to be watching, speaking of silver, the silver stocks, if you're a good producer, they are having some good days these days. Anyone that you're watching right now on the gold and silver miners side?
Yeah, the silver stocks have been doing really well, and this is still probably at the beginning of that bull market. So if you compare it to former bull runs, it's still in the early stage, I guess. Last time I was on 3 months ago, we talked about Silver Tiger Metals. They're in Mexico. The stock is up 125% since then, trough to peak. It's now pulling back a little bit. I still like the story very much. I think that Mexico is back on the radar. We've seen a few really large takeovers. Remember, Silvercrest got taken out by Core Mining, a deal above $1.7 billion. Then you had Gatos being acquired by First Majestic, and you had Meg Silver being acquired by Pan American Silver. So I think all these big producers clearly showing that they trust the new government in Mexico. Otherwise, they wouldn't invest these huge amounts of money. And Silver Tiger is one of the very few assets left that can probably come into production rather quickly. So all they need is the permit. I think this is coming in the next few weeks and months. And once they have the permit, it takes 18 months and they are in production. So that's still one of my favorite silver stock plays here. And of course, you have a large group of stocks that you can play with an ETF, but that's my favorite.
Yeah, the GDXJ and what have you. What about when you're looking at the juniors? Are we talking large cap producers with free cash flow, or is the strength in high grade juniors?
Well, what we've seen in the mining stock sector over the last few weeks was that a lot of smaller companies managed to get financings and actually doubled their financings, which is usually a little bit of a sign that maybe the market is a bit toppish. But if you zoom out and look at, for example, the TSXV, I mean, it's still far below its 2012 highs. And I think that's where the music is going to be going forward from here. Once gold breaks out above 3,500 and then really runs towards 4,000 and probably much higher, you're going to see some of those smaller stocks really exploding. The big names, many of them have done well. Some of them have disappointed as well. But I think now it's the time to really focus on the smaller juniors and also the explorers. That's, I think, where the value is, and that's where the music is going to be in the next 1, 2, 3 years, I guess.
Yeah, it'll be interesting watching M&A too. Hopefully, some nice takeovers. Okay, I got to ask you about the third asset that seems to be going nowhere fast. That's Bitcoin. It's now trading below 118,000 after topping near 123 earlier this month, and it hasn't broken down, but it clearly has lost some steam. Now, you've warned that that these parabolic runs often see about a 30% pullback. Are we just entering that phase?
Well, again, I mean, what I said initially, summer doldrums, it's true for all the markets, right? So usually the stock market sees a pullback of 5 to 10% in the summertime. Normally, Bitcoin is very much correlated still with the Nasdaq and the tech stocks. So I wouldn't be surprised if those two sectors pull back at some point over the next few weeks into typically September, October, right? But if you zoom out, I mean, I think the bull cycle is still intact for Bitcoin. Yes, we made a new all-time high, 123,000 and something. It's consolidating that move. Maybe it takes a few weeks here before we're going to see a new all-time high. I still think that not only my 125 to 130,000 kind of price target will be met this year, but most likely even 150,000 towards the end of the year. So it's still the music is still playing overall in the bigger scheme of things, even though we have a summer doldrums and maybe a few weeks of sideways consolidation or maybe even a pullback. I think the best is yet to come, and most likely it will happen in the last quarter, together with the year-end rally in the stock market. That's usually the pattern. So it still looks good. I don't think we've seen the big grand finale of that typical 4-year cycle for the cryptos and Bitcoin.
Okay, that's good to know. We're moving fast here, but I got to ask macro. I mean, obviously the Fed is expected to hold tomorrow. Futures are pricing in a 97% chance of no move. Meanwhile, the 10-year is down to 4.36%. And the U.S. dollar just hit a 5-week high. And again, I mean, we're not seeing gold and silver rallying at this moment. I wonder if rates stay the same tomorrow, we could see a nice 2 to 3 week run.
Well, I mean, the background, I think, is that we had a bit stronger U.S. economic data last week than expected, which obviously lowered the probability for a rate cut even further. And since gold has sold off since then, yeah, probably we could see a bottom here tomorrow. I don't think there's any surprise from the Fed tomorrow, but a little bit of a bounce for gold and silver, as especially gold is becoming slowly but surely oversold. So, but I don't think the Fed is going to lower interest rates anytime soon. Anyway, I mean, it's like there is inflationary pressure. I mean, we have the war cycle going on. There is so much pressure. Of course, Trump wants to get rid of Powell, but he's still running the show at the Fed, Powell, and I think he will continue to be rather not hawkish, but at least maintain that interest rate level where we are right now. And don't forget, in the end of the day, it's the market who makes these decisions. And in this environment, people demand, investors demand higher interest rates, and Americans still have a problem to find enough buyers for their treasury. So it's much more complicated than just the Fed wanting or having to lower interest rates. I mean, it's the market basically who tells the Fed what to do in the end of the day.
Yeah. Meanwhile, credit cards are 20%, mortgages are stuck near 7%. Hey, I got to ask, if you're holding cash in this market, though, what's the play here? I mean, do you wait for confirmation or do you take a shot at these levels?
That's a very good question and a very important one, because what I see again and again with retail investors is, especially now in the summertime, and I said it before, like it's the time to be at the beach, enjoy life, go into the nature, hang out with the family or friends. You don't have to chase the market, even if you have a large liquidity position on your bank account or whatever at your brokerage. Take it easy and wait for the trade to come to you, the investment to come to you, like don't chase it in these like summer doldrum times. I think we're going to see some good entry opportunities towards September, maybe latest in October. And that makes much more sense than to stress yourself right now while it's summer and there's other things to do. The markets are with low volume, tricky moves. You can have sharp moves in both directions, decisive moves. I wouldn't want it to be fully invested here. That's usually always a good recipe for the summertime. Don't worry. Let the trade come to you. I mean, that's really something that people need to learn. Being patient, this will always pay off. I mean, look at Warren Buffett. I mean, he's stacking cash for how many years now? He's waiting for an opportunity, and that's why he's able to wait, and that's why he has become one of the richest men on the planet. So I think people really, really need to understand that. And I understand it's difficult. It's a game with yourself. Being patient is not something that you usually learn in school.
Summer markets, they're always fun. Okay, my friend, let's do a quick lightning round. I'll just give you two options. Give me your pick and just one quick sentence why to wrap up. Gold or Bitcoin for the next 30 days?
I'm
going to say that one more time.
Already.
What do you think?
I would say gold.
Cool. Why?
I think it's a little bit further ahead into this consolidation. So if there is a move, it's probably going to be gold. And it has been leading, actually, Bitcoin higher. Don't forget that. So, and as we already just talked about, if the stock markets gets this typical pullback during the summer months, it will affect Bitcoin as well.
Okay. Silver or platinum for the upside pop? I know we didn't really talk plats, but it's been on a run, too.
Yeah, platinum has been amazing, actually. I would still stick with silver here. Yeah, I think it's been breaking out. I mean, the silver platinum ratio has been in favor of platinum, actually, but I would still buy silver. Yeah.
Okay. We talked a little bit about that macro, but Trump's effect on metals, with these tariffs and this discussion, is it bullish or bearish?
I mean, look, what Trump has created is like massive uncertainty worldwide, and that's always good for the metals. And so, and he will continue with that.
He'll continue.
It is bullish. It's all his policies have been inflationary. Basically, many of his promises he kicked out. Of course, he did not follow through, and he's been also pushing the money printers in the end of the day. So I think it's bullish for the metals. This whole Trump, the next 3 years.
Okay, and what about the next markets to break? Is it going to be equities or commodities? Of course, I say this just as the S&P hits 7 records.
Well, Jeremy, don't forget, I mean, we are in a cracker boom overall, and that means everything will move higher because they destroy the purchasing power of your fiat money, whether it's the euro or the dollar or the Canadian dollar, whatever. Everywhere, it's worldwide, that phenomenon. And so the stock market, as you've seen, I mean, the economic activity overall has not been very exciting, yet we are making new all-time highs in many countries. And so this is probably going to continue. So I'm not betting on a stock market crash. Of course, the usual summer pullback anytime, but I think commodities will definitely profit from this war cycle that we have. It's also that they will profit from the inflationary cycle that we are in. And you can see like all these trade deals, in the end of the day, the big geopolitical background story, of course, is, and we talked about this the last time, America against China. So now the US made a deal with the European Union because they want to have the European Union on their side, and they need to have the European Union on their side. And they made a very good deal. It's been a terrible deal for the European Union, but anyway, they didn't have any chance. So I think this whole commodity super cycle is intact. It takes time. We've seen copper moving nicely higher. Oil is still lagging a bit here, but this will come. It's just a question of time. And once we're going deeper into the war cycle again, you're going to see oil also catching up.
Yeah, interesting. Yeah, we didn't even touch on oil. I have been watching it closely. The WTI, the volatility's been wild. I got to ask you, more likely by September, $34.50 gold or $34 silver? I had to go contrarian for you.
34.50 gold is
34.50. Okay.
Silver. Yeah.
And hey, is crypto going to be stable for the rest of the summer, or can we expect more volatility ahead?
I think we're going to see a little bit of a volatility because Ethereum has shown up to the party recently, which is usually telling you that we are rather at the end of a subordinate cycle. So that means we're going to see a bit of more volatility in crypto. But again, I think we're going to see a nice buying opportunity into September, October, most likely towards the end of the year. And then also towards this grand finale for the crypto cycle, which is still coming. Don't forget, Bitcoin dominance has been falling sharply over the last few weeks. That tells us that things are basically heating up in the sector. And with all these massive progressive legislative moves in America, I think the party continues. The music is still playing. And it's going to be pretty crazy towards the end of the year. However, I also have to warn, I think once we've seen the top of this cycle, it's going to be very nasty because all these copycats of Mr. Saylor and all these treasury companies, which basically are not really buying the coins, it's all a leveraged kind of arbitrage or volatility play, and it's all financed on debt. So I'm very skeptic in the longer run for crypto, but until the end of the year, I'm still very bullish.
Until the end of the year, okay. Buy the dip, September, October. You heard it here. That's Florian Grummes. He's the managing director at Midas Touch Consulting, joining us from Europe. Hey, thanks for this, man. I appreciate your time.
Thank you. Always a pleasure.
Yeah. Cheers, Florian. Have fun with the family. All right. More coverage coming up all week on Kitco News. We got a lot of news to get to, including that Fed meeting. But as you just heard, about 97% chance whether it is not happening on a cut. So I'm Jeremy Szafron. Of course, for all of us here at Kitco News, hit subscribe. And we'll see you soon.